Welcome to the deep dive, where we try to cut through the noise and get to the core of what's really happening. Today, we're looking into a company maybe many haven't heard much about, but wow, it's been performing remarkably. AST SpaceMobile.
Yeah, that name's been popping up.
Exactly. Their stock, it's rocketed more than 330% in the last 12 months.
Which is huge compared to the Nasdaq.
Hugely. The Nasdaq composite's up less than 20%. So, I mean, that's a really striking difference, right?
Definitely catches your eye.
So, okay, what is AST SpaceMobile? Well, it's a low Earth orbit LEO satellite provider, and they have this pretty ambitious goal, connect the unconnected.
A big goal.
A really big goal. So our mission today is basically to unpack what they do, why they're getting so much attention now, look at their tech, and, what the future might hold.
Right, including the financials and the challenges. Always challenges.
Always challenges. We've pulled the key insights from recent analyses to help you get up to speed quickly on this rapidly evolving company. Let's dive in.
Okay, so AST SpaceMobile is tackling a genuinely critical problem. What they essentially do is beam cellular signals, 2G, 4G, even 5G, directly from their satellites in LEO.
Okay, from space straight to your phone.
Pretty much. Think about all those big coverage gaps you get in rural areas.
Right.
Places where traditional cell towers just don't reach well or at all.
Yeah, dropouts, dead zones.
Exactly. That's the specific problem AST is trying to solve.
Yeah.
I mean, imagine the impact. A farmer out in the middle of nowhere suddenly getting a decent signal, maybe video calling family.
Or, emergency services, remote healthcare.
Right, that kind of shift is what they're aiming for. It's pretty fundamental.
It is a powerful vision. So how are they doing it, technologically speaking? Our sources mention they use low to mid-band spectrums for the data. What does that mean for, what they can actually deliver, especially compared to someone like, say, Starlink?
Yeah, that's a really key difference. So those low to mid bands, okay, they might operate at, let's say, lower speeds compared to the higher frequencies.
Lower speeds, okay.
But, and this is the crucial part, their longer wavelengths mean they penetrate buildings, trees, other obstacles much more effectively.
So more reliable coverage, maybe.
Exactly. Broader, more consistent coverage.
Yeah.
And critically, it works directly with standard mobile phones. No special dish needed.
Right. Unlike Starlink, typically.
Precisely. Starlink uses those higher band spectrums. Potentially higher speeds, yes, but different coverage characteristics, and you generally need that specific user terminal, that dish.
So AST is really optimized for just wide area phone signal.
Direct to standard phone cellular. Yeah, that's the niche.
And it looks like they've convinced some major players. The sources talk about partnerships with AT&T, Verizon, Vodafone, Rakuten too.
Big names.
How critical are those partnerships? Is it just about validation, or is it more fundamental for actually rolling out 5G from space? And what does that do to the competition with Starlink?
Oh, they're absolutely critical. It's definitely validation, shows the market believes in the tech, but it's more than that. These telcos provide the existing customer base, the networks to integrate with.
The pathway to the users.
Exactly. Makes the whole satellite cellular network viable. And yeah, you mentioned Starlink. They've got their own deals, right? T-Mobile, Rogers Communications.
Right.
So it shows both these big players see the potential in LEO satellites for expanding cellular reach. They're both locking down those essential telecom relationships. It's definitely competitive.
Okay, so speaking of market validation, or maybe lack thereof initially, it's quite a journey they've had. They went public, 4 years ago? Through a SPAC merger.
Yeah, special purpose acquisition company, that route.
Right, the SPAC route, which back then often got a, let's say, skeptical reception.
A lot of hype. Sometimes not much substance.
And our sources say the bears, the pessimistic investors, they kind of dismissed AST SpaceMobile, just another speculative space stock, maybe wouldn't hit its big goals.
Yeah, there was definitely that sentiment around a lot of SPACs, especially in the space sector. High ambitions, high risk.
But clearly something changed. What were the key things they actually did to challenge that skepticism?
Well, they started hitting some really significant operational milestones. A big one was last September. They successfully launched their first 5 commercial satellites. The Block 1 Bluebirds, or BB-1s.
Okay, first 5 up. That's real hardware in orbit.
Real hardware. And then, importantly, this past January, they got a nod from the FCC. The Federal Communications Commission gave them temporary authorization to start testing.
Testing with whom?
With AT&T and Verizon's networks. Using those first 5 satellites, that was a crucial regulatory step.
Yeah.
Showed the system could actually, potentially work with major carriers.
And it seems like they're not stopping there. The ambition is accelerating, right? What's next?
Yeah, the next big thing, apparently just around the corner, is launching their first Block 2 satellites, the BB2s.
Okay, Block 2, what's different about them?
Well, according to the info we have, they're planning to launch the first 4 within the next couple of months. And these are, well, they're beasts compared to the first ones.
Beasts how? Bigger? Faster?
Both, it seems. Supposedly 3.5 times larger than the BB1s. And, get this, designed to process about 10 times more data.
Wow, okay. 10 times. That's a serious upgrade. A huge leap in capability for their constellation, as they call it.
It really underscores that long-term vision, doesn't it? The big plan, eventually, is to expand that constellation to 243 LEO satellites.
243, that's a lot of satellites. That would be significant global coverage.
It would represent a major step towards that goal, yeah. But, and this is a big but, that kind of full-scale deployment needs much broader approval from the FCC.
Right. The temporary authorization is one thing, but full constellation approval is another hurdle entirely.
Exactly. That remains a key regulatory gate they have to get through.
So, okay, you've got these successful launches, the early regulatory nods, big telecom partners signing on, these much bigger satellites coming. How directly do you think that feeds into this just dramatic stock rise we talked about?
Oh, I think it's directly linked. You see those milestones hit, the partnerships solidify, the tech roadmap looks bolder, investor confidence grows.
And we saw that detail in the sources about insiders, right? Buying way more shares than they sold.
Yeah, insiders buying 52 times as many shares as they sold over the last year. That's a very, very strong signal. Usually means the people who know the company best are feeling pretty good about the future.
It certainly suggests strong internal belief.
It does. But it also brings us right to the financial picture. And the question of, is the stock price getting ahead of itself? Is it overheated?
Because the current numbers are, well, different.
Very different. For 2024, we're talking $4 million in revenue. $4 million.
Okay.
But a net loss of $300 million.
Right. So losing a lot more than they're making right now.
Exactly. And you contrast that $4 million revenue, $300 million loss with a market cap, last check, around $14.9 billion.
Billion with a B. Yeah, that's quite a disconnect for some folks, isn't it? Seems like it's priced heavily on future hopes, not current reality.
Absolutely. It's what some might call a story stock right now.
Yeah.
The valuation is baking in massive future success, huge growth, discounted back to today. It relies heavily on everything going right.
So let's talk about those future hopes, the financial projections. Analysts are expecting pretty astronomical growth, aren't they?
They really are. The forecasts suggest revenue could grow at a compound annual growth rate, a CAGR of 490% between 2024 and 2027.
490% CAGR, that's wild.
It is. Landing them potentially around $903 million in revenue by 2027. And crucially, the analysts also expect them to actually turn profitable by that year, 2027.
Profitable by 2027. What's supposed to drive that kind of turnaround and massive growth?
It's all predicated on that satellite constellation, scaling up successfully, launching more BB2s and beyond, and then activating those big telecom partnerships to bring in subscribers and revenue.
Okay, so hitting all those technical and commercial milestones.
Exactly. And just for context, the overall global EVO satellite market, that's projected to grow too, but more like 15.5% CAGR between 2025 and 2035.
Okay, so 15.5% for the market versus AST aiming for like 490% growth in the short term.
Right. It shows they're not just planning to ride the wave, they're aiming to massively outperform the average, banking on grabbing a really big slice of this emerging direct-to-device market.
There's always a but, isn't there? There's this issue of dilution, which the sources highlight.
That's a key concern for investors.
They've increased their number of shares by, 381% since the SPAC merger?
Yeah, a huge increase.
And that's come through things like secondary stock offerings, convertible debt, and also stock-based compensation for employees, right? Which apparently more than doubled last year.
Correct. Stock-based comp hit about $32 million in 2024. All these things add to the share count.
So what does that dilution actually mean for investors holding the stock and for the company's strategy? Is it just the cost of doing business in this sector?
It sort of is for a capital-intensive venture like this. It means each existing share represents a smaller piece of the pie. And yeah, the expectation is this dilution will likely continue as they keep raising money to build and launch all those satellites.
So it could keep pressure on the stock price, or at least keep the valuation per share high, even if the total market cap doesn't change.
It can certainly feel that way for existing shareholders, yeah, spreading the ownership thinner. However, on the plus side, liquidity looks okay for now.
Okay, how so?
Well, at the end of Q1 2025, AST had about $874.5 million in cash, cash equivalents, and restricted cash. Plus, they recently did another $500 million convertible debt offering.
Right.
So that suggests they do have the funds lined up for the immediate next steps, building and launching those initial BB2 satellites. They have runway.
But the cost of that runway is potentially more dilution down the line.
That's the trade-off they're making, yes. Fund the growth now, deal with the share count later.
So putting it all together, the tech promise, the partnerships, the huge growth forecasts, but also the losses, the dilution, the massive stock run-up, what's the short-term feeling? Especially with these BB2 launches supposedly imminent and waiting on that full FCC approval.
Well, the analysis we looked at suggests caution in the short term. The stock rally clearly anticipates those next milestones, the BB2s launching successfully. Good news from the FCC.
Right, pricing in the good news already.
Exactly. And the worry is maybe too much enthusiasm is priced in right now. One source even suggested it, quote, could easily be cut in half before it doubles again.
Wow, okay, so volatile.
Very, and potentially vulnerable if the wider market takes a dip. So the thinking is it might struggle to keep outpacing the market over, say, the next 12 months. It needs to deliver perfectly on those next steps.
But longer term, looking out over the next decade, maybe?
Longer term, the potential is still there. AST could certainly beat the market significantly if, and it's a big
if they build out that full 243 satellite constellation.
Yes, if they execute on that massive build-out, get full regulatory approval, and successfully attract a large customer base through their telco partners. If all that falls into place,
then the current valuation might look justified in hindsight.
it might. But it's crucial to keep the scale in perspective, too. AST is still tiny compared to Starlink. Remember that estimated valuation for Starlink?
Yeah.
Around $350 billion last December.
Right. AST is at what, $15 billion market cap, so orders of magnitude smaller right now.
Exactly. So huge potential upside if they succeed, but they are starting from a much smaller base and facing enormous execution risks.
What a fascinating story. Okay, let's try and wrap this up. To recap, AST SpaceMobile. You've got this genuinely groundbreaking technology idea connecting standard phones directly from space. Super ambitious growth plans.
Aiming to solve a real problem.
But on the other side, you've got significant financial losses right now, ongoing share dilution, which is, part of their funding strategy, and a stock price that soared, leading some to call it highly speculative.
It's a real dichotomy, isn't it? High risk, potentially high reward. And its journey, well, it has direct implications for you listening.
How so?
I mean, this company or others like it could genuinely change how we all access cellular service, especially if you're in one of those underserved areas.
Right. It could fundamentally shift connectivity.
And its progress, or lack thereof, is definitely shaping the future of both the space industry and the telecom world.
Which leads us to a final thought, maybe. Considering AST's big plans and the strategy of heavy share dilution to pay for it all, what does their path tell us about maybe the future ways these huge, expensive space ventures will get funded?
Yeah, and what does it say about the inherent risks involved? Not just for AST, but for anyone trying to build massive infrastructure in space.
And how might those funding models and risks ultimately shape what global connectivity looks like in the future? Who gets connected when and at what cost?
Exactly. Something to definitely mull over long after this deep dive.